Plan B has sold all his Bitcoin, and this is massive dynamite because he is one of the top Bitcoin advocates and known for his stock-to-flow model. There are many hostilities now, but other people can absolutely understand him here. We are looking at the background and why this headline is currently causing the Bitcoin community to escalate. At the same time, CZ makes a statement here that there are many more sovereign wealth funds that also include Bitcoin. We look at who this could be, and additionally, we see that there is now a call for Elon Musk to audit Fort Knox, to check if there is really gold there and if the USA truly has as much gold as it claims to have. First, we have a very, very exciting development here. We see that there are now Bitcoin credit cards from Visa and also from Fold. I know that Fold is supposed to be released soon, and probably Visa as well shortly. However, I believe there is no official release date yet, and this is so significant because it would allow Bitcoiners to live off their Bitcoin holdings without touching fiat money. That means you are essentially living purely on credit. You have your Bitcoin deposited, and from that, you create a credit card like a Fold or a Visa card, allowing you to live solely on Bitcoin without ever spending Bitcoin, but always living on credit, which is then settled later. Jack Mallers, for example, has been doing it for a very, very long time. He also says about himself now that he doesn't have any dollars anymore, because such credit cards make this possible. And in this way, you have essentially combined both worlds. You also need to know what you're doing so that you don't over-leverage yourself, don't spend too much money, and lose control of your expenses here. This means it's a very good option for people who don't want to sell their Bitcoin, but still want to keep their expenses under control. And then we have a very interesting statement from CZ, who has really called out the sovereign wealth funds here in Abu Dhabi. He already announced at the men's conference that Abu Dhabi holds Bitcoin. Now he additionally states that this report comes only from one of the state funds, Mubadala, in Abu Dhabi. There are several other sovereign wealth funds in Abu Dhabi. This is a very, very important piece of information, as he definitely says here, hey, it could well be that other sovereigns also hold Bitcoin, and not just in Abu Dhabi, but also in other countries. It's quite possible that this is just the beginning of a very, very large wave, of many waves, where they will announce their Bitcoin holdings in the near future. And then we had something else very interesting here. We now see that the Department of Government Efficiency is uncovering more scams, more fraudsters, more tax waste, more money waste, and more budget deficits here in the USA. USAID would also be uncovered, and there is a proposal from Ron Powell to audit the Fed. The IRS is supposed to be audited, and now there is actually a pretext from Zero Hedge, which suggests it would be great if Elon Musk could take a look inside Fort Knox to ensure that the tons of US gold are there. The last time someone checked was 50 years ago, in 1974. And that's quite intense when you consider it, especially with what's currently happening in the gold market. We are witnessing a huge gold rush right now. People want to get their hands on their gold. They no longer believe in the paper gold promises, and a massive story is going to unfold if trust in gold continues to erode. And that's why Bitcoin is superior here, because we can clearly verify on the blockchain whether the Bitcoin holdings are there or not. We don't have to rely on some Fort Knox or anything like that. I mean, it would be like having to trust someone about whether all 21 million Bitcoins are really there or not. With Bitcoin, we can easily verify, hey, we have 5 Bitcoins and we have 5 Bitcoins out of 21 million, or we have 10 Bitcoins and we have 10 Bitcoins out of 21 million. Of course, if you buy an ETF or something like that, the story looks different again. Then you potentially also have a paper Bitcoin risk. But with gold, the big problem now is that there are central banks, like the Bank of England, that only release their gold reserves with a very, very long delay. So a waiting period of 2 or 3 months or something like that is normal. And the problem is, if you want to access your gold very, very quickly, you can't get to it right now. And that leads to even more issues because then even more people want to access their gold. As people become distrustful, more want to get in, the waiting times increase even more. And as a result, more people become impatient and more people become suspicious. And then even more people want to access the gold. And so you basically have a vicious cycle set up here. I don't want to say that the whole gold Ponzi is exploding now, or that it is a Ponzi scheme. I mean, gold in physical form is a very, very good store of value. But in the paper variant, it is very, very questionable. That's why there's always the recommendation to hold Bitcoin and gold only in self-custody. But now we really come to the next point. We had the tweet from Plan B here, and Plan B is known for his stock-to-flow model, also for some controversial views he holds sometimes. Some of his predictions were also wrong, and he often clashes with the community. Plan B is actually also known as a Bitcoin maximalist. And now he says here, full disclosure, I have converted my Bitcoin into ETFs, meaning he sold all his Bitcoin, and then bought ETFs with the fiat money. Yes, I know, not your keys, not your coins, but for me, it's simply safer to manage Bitcoins in the same way as stocks and bonds. Additionally, it reassures me that I don't have to deal with keys, so the keys, I think I'm no longer a maxi, and this has caused quite a stir here. The entire Bitcoin community is currently escalating over this. And if you look down here where I copied the tweet, it had expressions. And now it has well over 1 million expressions. There are a massive number of comments here, many people who, for example, say, hey, I understand if you don't want to do it this way. Many people who are just neutral, saying, hey, you can do it, just do it in the way that suits you best. Bitcoin is open to everything. There are different forms of Bitcoin. You can hold it either in the form of a company like MicroStrategy, or you can hold it indirectly through an index, for example. Through the NASDAQ, you can hold it directly with your own keys, or you can hold it indirectly through a Bitcoin ETF. Or you can hold it through options. You can hold it through any other certificates or something like that. You can hold it through convertible bonds. That means there are more and more ways to hold Bitcoin here. And in principle, people should be given the freedom to choose, for example. If someone wants to do it with a Bitcoin ETF, then of course they are entitled to, but it goes against the fundamental principles of Bitcoin. And that's also what I always tell you, not your keys, not your coins. As long as you have a Bitcoin ETF, you basically have a claim to the Bitcoin. That means you have to trust BlackRock, for example, that they don't issue more paper Bitcoin than there are actual Bitcoin. I mean, the likelihood that something happens with BlackRock is not very high, but we also see it in the gold market. In the gold market, the risk is even higher because it's easier to commit fraud, whereas with Bitcoin, you could simply provide a proof of reserve each time. And there are instances where certain addresses from BlackRock are disclosed, showing that there are certain Bitcoin holdings. While there isn't a proof of reserve to the utmost detail, some proof of reserve is certainly provided. And there's also the concentration risk that if something happens with Coinbase manages, I believe 7 or 8 Bitcoin ETFs out of around 12 or so that exist in the USA. The numbers aren't exact, but roughly speaking. And if something were to happen with Coinbase, then there would be a huge problem as well. Additionally, when you have Bitcoin ETFs, you also face the problem that you don't have complete self-sovereignty. This means you no longer have censorship-resistant money, you can't deal, trade, or buy something with it 24/7. You simply have certain disadvantages compared to holding Bitcoin in self-custody. And I always tell you this, get yourself a hardware wallet. I'll put a link below to a TREZOR hardware wallet where you can easily, securely, and simply hold your Bitcoin, protecting yourself from hackers as well as potential Bitcoin bans. Some people also say, okay, the Bitcoin ETFs, the BlackRock Bitcoin ETFs, are a kind of Trojan horse where the US might eventually say, hey, we're going to implement a kind of gold ban like there was back then, and we're now confiscating all the Bitcoin that BlackRock holds. Some even say that this could be the potential strategic Bitcoin reserve of the US by simply converting the Bitcoin from MicroStrategy and BlackRock into a strategic Bitcoin reserve. But those are absurd theories. I absolutely don't see that happening right now. So the Bitcoin ETFs are relatively safe, but if you really want 100% certainty, if you want to be sure and also adhere to the principles of Bitcoin, including why Bitcoin was actually created to be independent of third parties, then you simply have to hold your own keys. That is the very strong recommendation. Eric Baljunas comments on the whole thing and says, if this is real, it speaks volumes if a Bitcoin maxi with 2 million followers suddenly switches to Bitcoin ETFs, then it also confirms that people indeed have trust in this product. It should be noted that Eric Baljunas is more of an ETF maxi, who is naturally also an ETF expert, and has massively pushed Bitcoin ETFs forward, frequently reporting on them. He further states that, not to mention, they don't have to be afraid of being robbed at gunpoint. On the other hand, I also understand those who want to have their own keys. To each their own, it has its pros and cons. You have the problem of a $5 wrench attack, for example. If someone knows, okay, where are your keys? I can hold a gun to your head and say, hey, either you give me your 24 words now or I shoot you, or I hit you on the head until you hand over the keys. You can also protect yourself against that with multi-signature, with a passphrase, with a 25th word, or simply by storing your seeds in such a way that you can't even access them yourself. So there are various options here as well. It's not like Bitcoin in self-custody is suddenly more dangerous than Bitcoin that isn't in self-custody. The biggest danger of self-custody is simply the person themselves making a mistake. But I really want to encourage you here, have Bitcoin in self-custody so you reach the next level of sovereignty here. And if you do anything, don't do it like Plan B, where you sell all your Bitcoin and then swap it into ETFs, but only swap a small part. Then you can have, say, 50% in self-custody and 50% in ETFs. Then you're somewhat diversified. If something should happen with the ETFs, then you still have the self-custody Bitcoin. And if something should happen with the self-custody Bitcoin, then you still have the ETFs. And in this way, you're actually very well positioned. Dan Held has an interesting point here. He says it's not about whether someone is a maxi or not. It's about the individual decision of whether you have control over an asset or not. Do you trust yourself or someone else? And that is really the crucial question. He really hits the nail on the head here. Do you trust BlackRock more? Do you trust Vanguard more? Or do you trust Fidelity more? Or any other asset managers? Or do you trust yourself, for example? 21 Bitcoin, I also promote 21 Bitcoin. You can also leave your Bitcoin with 21 Bitcoin. Or do you trust, for example, Coinbase or any other exchanges that exist? Do you trust these institutions more or do you trust yourself more? If you, for example, Say, hey, I trust 21 Bitcoin. Hey, then let's go. Then leave all your Bitcoin with 21 Bitcoin. And I also think 21 Bitcoin is a very, very good company. I have a lot of trust in it, but I still tell people, hey, withdraw your funds from 21 Bitcoin, withdraw your funds from the ETF and whatever else, because then you simply have the Bitcoin under your own control. And that's also the idea of Bitcoin, that you gain your own power, your own self-sovereignty. And many people are also afraid of this, self-sovereignty, because it's just something unfamiliar. People aren't used to managing their own assets. Something like this has never existed in history. Stocks were held by others. Your money was held by the bank, real estate. Well, okay, you do somehow manage that yourself, but then you're dependent on the territory that the state manages and the state essentially guards. That means you really don't have any assets, even bonds and so on. You can go through the whole list. There have never really been assets historically that you can hold in self-custody. Even gold was not really held in self-custody. Because then you also had some service providers, banks, and so on that held the gold for you. You can now see the problems when some service providers hold the gold, that sometimes you can't access the gold anymore. And the same thing can happen with Bitcoin if you outsource the Bitcoin to an exchange, an ETF, and many other things. And even if they are somehow cool companies like 21 Bitcoin, you are still making a trade-off here. You are taking on a certain risk here, which you can definitely eliminate as soon as you withdraw the Bitcoin from 21 Bitcoin. There are also very simple options with auto wallet transfer and many others. I'll also include a link below on how you can easily and securely buy Bitcoin here. With the code Bitcoin Hotel, you can get up to 20% off the fees when buying Bitcoin. Let me know what you're doing. Are you also selling all your Bitcoin now, or are you happy with your self-custody? Until then, peace out.